Hello, everybody. What's up? What's up? What's up? I hope everyone is doing well. All right. And here is the most awaited video, and that is going to be the CRP reversal. And we're going to be talking about it in depth. Okay. In depth. Maybe it'll be fast. Maybe it'll be long. I don't know. I don't know at all. Okay. All right. So now, before we start, I want you to understand that I want you to like, comment, and subscribe and help push this video so that you guys will get the CRP continuation video. All right. So now you all know by now that the CRP reversal on the daily, in terms of daily price action, is highly dependent on what the 15-minute price action does relative to the daily open at 6 o'clock, 6 p.m. Eastern Standard Time. Okay. Now, what is the main condition? So the main condition, right, is that by 3 a.m. Eastern Standard Time, the 15-minute chart must have closed through the daily open by a count of more than 3. Okay, by count of more than 3. So when this is in effect, when price has closed up 1 time, 2 times, 3 times, when this simple signature is there, okay, you will have to check whether a high or low has already formed through inducement. Now, what that means is, let's say on the 15-minute chart, you get this, it goes up and it goes down, right? Now, you need to check whether this high that has formed, whether price has induced something, or whether there's a large scale SMT divergence over here, because that is what caused the reversal. Okay, we must do some form of trapping, right? Or longs and shorts must be trapped when highs and lows are formed for it to be a reversal. Okay. Now, inducement is in terms of order pairing, okay, and order trapping, as I just mentioned. So it is very important for any type of high or low to form in price for there to be some form of order pairing and or order trapping. Okay. So there has to either be an inducement or an SMT divergence to confirm a high or a low. Now, this is what you're looking for, just in case a high or low has already formed when you see price expanding, so that you understand that, okay, you know what, the reversal has already happened, so let me just look for continuations. Okay. If there is no inducement, there is no SMT divergence behind a high or a low, then that data point is a prime candidate to reverse from. Meaning, let's say you have the opening price, right? Let's say the Asian high is just there. Now, when price has not done an SMT, when price has not done an inducement, then this is the high that you're interested in for price to take out and then reverse. Okay. So alternatively, from the opposite way of looking at this, you can find a low, induce it, and you can buy. Because when you are in a reversal profile, when you're in a CRP reversal, price is more or less going to diverge, or rather converge through to the opening price, above and below the opening price. If we want to induce to go up, there's a condition. If you want to induce to go down, there's a condition. And that is what I'm going to come to now. Okay. So the bullish condition right here is when below the 6 p.m. EST opening price has done either of the following. It shows an SMT divergence with a session high or low, in this case, a session low. It has induced a low, or it has hit a high RR filter point. So even the simple act of doing this is enough to call it an inducement. Okay, even the simple act of doing that is enough to call it an inducement. If either of these conditions exist within price, there is no reason to go back below the 6 o'clock EST open and take lows. Meaning, if price is already induced, there's no reason to come back down and induce again. To just go up. Okay, that is the bullish condition. Now, before I continue, please like, comment, and subscribe. The bearish condition. The bearish condition is, of course, the opposite of the bullish condition. Above the 1800 opening price has to do either of the following. S&P divergence, inducing a high, hit a high RR filter point. Okay, meaning we have something like this, let's say, yeah, open, 1, 2, 3, done that, and then goes down. That is the reversal. Okay, and you will notice that sometimes if there's no high impact news driver, throughout the day, price will most likely be choppy, whereby price will just go up and come back to the opening price, go up, come back to the opening price, like that. Okay, there are variations, of course, based on the session, but this is the general idea. So if either of these conditions exist within price, either one of these, there is no reason to go back above the 1800 EST open and take highs, meaning when we have already reversed, there's no need to go back up there and reverse again. No, it will stop somewhere inside the range here and then go down. That is a bearish CRP reversal. Okay, I hope you understand that. And then finally, we have the neutral condition. The neutral condition is like this. Let's say price has not taken any higher low or formed an S&P divergence. For example, let's say that you are bullish, okay, and price is pumping with no valid low being formed. Okay, then what you will do is you will short until price goes to the opening price. Okay, you will look for price to either hit a high RR filter point below the open, or you will look for price to induce a low below the open. That is how you deal with a reversal profile while price is just expanding without forming a valid low, without any form of inducement happening over here. If it's just pumping, it's suspect, it's manipulation. You can sell at a key point, of course. Buy side taken, boom, sell. Okay. Now let's say that you're bearish. Okay, you're bearish and price is dumping with no valid high being formed. Then you can buy until you can induce a high above the opening price. Same condition. We can induce a high, or we can hit a high RR filter point above the open. That would then trigger the CRP reversal. Okay, that will then trigger the CRP reversal. Example. Let's take a look at a few examples and then let's call it a session. All right. So here, what can you see? This high has not induced anything. Okay. In fact, this is where the inducement is. So it did not even take that high. All right. Price comes into the doubling section. That's when the next video is going to be about the doubling section. And you can see how price induced this low. This is the first introduction of liquidity into this manipulating range. That is your true inducement. Okay. Price induced. And of course, I'm showing you a reversal profile. Right? How is the reversal profile? Say 1, 2, and this is 3 o'clock. Around this candle is 3 o'clock. Just before 3 o'clock, we closed again, making it a reversal profile. So when price has already begun the reversal, there's no need to go below this low again, right? It will just induce for the session and go up. And then remember what I said, when we have a reversal CRP, price will tend to come back to the open. Yeah. Converge. Okay. Next. Here. Opening price 1, 2, 3. See this? This is a 30-minute high RR filter point. We began the reversal here. So during the London session, we don't need to come back down here again. We don't need to come back below the 1800 opening price. So price will then reverse, and it will reverse until it hits a liquidity pool. Again, you will see this is from last Friday. And if you look at yesterday's price action, we sold all the way back down. Why? It has to come and converge. Okay. It didn't come here actually, it came somewhere here, but same thing. It's trying to converge over there. All right. So once the reversal begins, it will not stop until an opposing liquidity pool or an inducement point. Right? Next. This high right here, Asian high, I think it's the Asian, yeah. This Asian high has not induced anything. What is there to induce? Nothing, right? Not done anything. Price drops, it's a reversal profile. So what price must do is it must then induce, if it wants to go down, we must induce something above the opening price. So this high has not induced anything, so that's going to be the inducement. And because the Asian low has not done anything, because look, it's not responsible for anything, price will reverse there and it will converge back to the opening price. Okay. Now this was a live example. I'll show you the after as well. Okay. This live example goes like this. It's a reversal profile. Here it's an inducement of a low below the daily open. Why is this an inducement? Why is this an inducement? See, this down close is a propulsion block. So there's a range over here, right? We formed a low inside that range. That's the first introduction of liquidity. And we made a new high. So that is where everyone will get trapped. Everyone will get trapped right here. That will be the reversal point. So from there, we don't have to come down here again and go back up. No, we will now continue higher because that is the reversal. Okay, we are reversing higher. We look at the result. See that? See? See? Okay, that is the result. And again, Sean, I show you're not cheating. No, I'm not cheating, bro. See, look. Before, look at the top over here. See, top left here. June 16, 2024, 0556. 556 UTC minus 4. Come here. Hello. June 16, 2024, 7:39. So basically 2 hours later. Okay, it happened perfectly. What's this? Breaker. Why? Use the range, sold off, and then invalidated it, inverting it. This is a breaker. That's why it caused price to go higher. Okay, but because you know it's a reversal profile, it became easy. Okay, next one. So right here, what do we have? Reversal profile. Why is it a reversal profile? Because that's the open right there. So this is close number 1, close number 2, close number 3. That's enough to know that it's a reversal. And there's a high RR filter point right here below the daily open. Okay, so there's no need to go back below this low again. Retrace and continue higher. So that's the reversal. Okay, and then upon hitting liquidity pool, we can expect price to go down. But look at this. This is Nasdaq. There's nothing on the left because it's making new all-time highs. That's why it's just going to keep on going up. Okay, all right. See if there's any more examples. I don't think so. Yeah, no, that's pretty much it. So you guys saw a lot of examples, right? And I would hope that you would go and do the homework. And I would hope that you make this video go viral. And what I mean by viral is I hope you help us, you help me get more views on this video, because this is something that's heavily underrated. And the more people that get to know about this concept, the better their trading will be. And I hope you will find this useful in your trading as well, because it certainly is helpful for mine. And I use this on a daily basis, both for the daily profile and for every other fractal time interval that I use, which of course information is available in my one-on-one mentorship, which I'm not doing at the moment. So if I am doing it, I will let you guys know in the Telegram chat. All right. So that's it. I hope you found this insightful. Please do like, comment, and subscribe. And if you want, you can subscribe to the video course, where in which you will have access to the bias prediction, which has almost 100% success rate. With that, I'll see you in the next one. Good luck and good trading. Bye-bye.